Hello, everybody. This is the mayor, and I'm here with
Dee.
Dee. She's our director of marketing. And I just wanted to start this third segment talking about the history of property taxes here. Now that we've had an opportunity to understand how to read your tax bill and how your municipal money is spent. And there was actually a EBTV segment that I did discuss this a couple of years ago. So
Yeah.
anybody who really does want to go back and get this in a lot more detail than
Yeah,
we're going
more
to do
in
it today.
depth. Yeah.
Welcome to go back and review that. Taxes in New Jersey are not new. People had to pay even before colonial times when we had a revolution because of
Yes.
being taxed by the English. But the fact remains that when you live in a municipality, there's costs that are involved and they need to be paid for.
Yes.
So history of taxes in New Jersey go back to the 1600s when we were a colony.
Yeah.
But what ended up happening over the course of time is that as we got closer and closer to the 1900s, actually the 1960s, there were some significant changes that occurred in New Jersey in terms of reducing the things that were taxed.
Okay.
Most people today don't even remember that there actually was a time here when houses of worship were taxed, farms were taxed. Most of New Jersey was, rural farms. Cemeteries were taxed. Many business taxes were paid. People used to have to pay on their inventory. Veterans' homes and veterans' facilities were all taxed. So in the 60s, the New Jersey State legislature got rid of all those taxes and they became exempt. So as you look at taxes, the most recent year for which they have statistics is 2018, and roughly 13% of all property in New Jersey is actually tax exempt. So the 87% of the rest of us are paying for all of those expenses. So that was a major change.
Yeah.
And that was coupled with the fact that in the 50s, 60s, and 70s, there was this major migration of people to New Jersey out of the city. The city was very expensive, was getting more dangerous. People were more inclined to commute. And New Jersey was prime real estate for that. We were actually considered a low tax state.
Unbelievable, yes.
Hard to believe,
Yeah,
right?
yeah.
There was no income tax in New Jersey, just like states today, maybe Texas and Florida,
Yes.
that don't have state income tax. We didn't have it. So a lot of businesses moved here, people moved
They
here.
became
and-
attracted here because of that.
Exactly. 50s, the late 50s under Eisenhower, the Turnpike extension came all the way out to our area. So people were able to legitimately commute from here to the city. And so our biggest rise in population happened in the 50s, mostly the 60s and early 70s. So the end result of all of that migration is that more and more people needed services, most significant of which is the schools.
Yeah.
And as schools needed to grow, school buildings, the more teachers, all of that put a strain on property taxes then.
Yeah.
And so the state of New Jersey responded in 1975 under Governor Byrne with a state income tax for the first time. So people think we've always had state income tax. It started in 1975. And the primary purpose at that time was to fund public schools because property taxes were rising so dramatically that people were complaining that they needed some relief.
Yeah.
And unfortunately, what the promise didn't end up always working out. And so while the state thought that by increasing and putting in this state income tax, it would help support schools, they failed to realize that as people move here, state services in general went up.
Correct.
So they needed that income tax to plug holes in their budgets, and so it never really all got back to fully funding schools the way that
They
they had
wanted.
intended from
Yeah.
the beginning.
Yeah.
And so that really caused us to have to look at how we are going to fund public schools.
Yeah.
And New Jersey took the approach early on through what was known as the Abbott decision. And what they did was invent or develop a progressive taxing system in which schools are funded in the order in which you have the ability to pay. So if you're a more affluent community, you have to pay more towards public schools than if you're in a less affluent district. And they name districts with letters, A through I. And if you were an A district, you got most of the state aid because you were generally less affluent. And as you moved up to area schools or in districts that were more affluent, they got a lot less of the tax money. So if you look in total at how New Jersey municipalities, what percentage of their taxes are going towards public schools, the average for New Jersey is roughly 50% of the bill goes to public schools.
Wow.
But if you look at East Brunswick, which is considered as more affluent, so East Brunswick, if you look at your tax bill, we already discussed this in one of the other segments, 62 to 65% of your property taxes are
Goes
going
towards that.
to the public schools. One of the other big areas that unfortunately taxes are not being paid to townships in the manner in which they should is this whole concept of energy tax receipts. Energy tax receipts are basically township money that is paid to townships from utility companies. So if you look around town, you see a lot of times there's lines that are put either underground or above ground from utility companies. Well, that's land. They're supposed to be paying taxes on that. And they had been for years and years and years and still do. But in the 1980s, the state decided that, and the utility companies decided it would be easier if the state collected all those taxes and then the state gives them back to the township.
Townships.
Really didn't need the state's help in that. But then, in fact, they took a percent for managing that.
Wow.
Ultimately, what ended up happening in time is that the state ended up using a lot of that money to plug their own budget gaps, especially in years when the state budget was tight. And so towns have seen eroding levels of energy tax receipts coming to us, which is annoying because it's our money.
Correct.
There's a bill actually going through the state legislature right now. We're hoping that it's incorporated in the state budget where towns are rewarded back the amount of energy tax receipts that they've been due for years. The state hopefully will adopt that, and that will help bring money back into towns that is already their money and was the purpose of which was to help reduce the need to rely on residents to pay for that missing income.
Yes.
So we'll got to keep our ears tuned for the
Yes,
budget, which
I
is any
know.
day. The state, over the course of time, recognized that property taxes is a big issue for most residents. I mean, it's clear they say that every single time an election comes around. And so a series of governors have made efforts to try to fix that. Looking at the more recent ones, under Corzine in 2007, one of the things that he tried to do was to impose a requirement that taxes not go up beyond 4%. And while today that may seem as no big help, but in 2007, taxes had been going up 6 to 7% per year. So it was a cutback from the increases people had been used to. And along with that, there were other things that he imposed, such as limitations on pension abuse, where people couldn't collect from multiple pensions, which had happened regularly here in New Jersey. They reduced the amount of government waste and made some programs for seniors where on fixed incomes, if they can't handle the constant increase in property taxes, they don't have the ability to make up that and pay for that. So he put in a bunch of programs that helped seniors. As we fast forward next to Governor Christie, we were, of course, in a little different economic time, and interest rates had already started to go down. So he imposed the 2% cap, which also helped a lot of expenses because towns, schools were required to not go above the 2% cap. There was also more pension reforms that he put through, and he required that employees in government start to pay into a portion of their health care and a portion of their pension, something that they had not had really never had to do before. And that also helped reduce some township expenses and made it easier to be able to stick to that 2% limit. And then, of course, with Murphy, the state has slowly but surely actually gotten into a much better economic picture. Well, the first time in a very long time, we actually have a surplus. So we're in whether that's from gambling income, him encouraging more businesses to come to New Jersey and set up shop here. I don't even know if we've seen really the full effect of cannabis legislation and the money that's going to come to the state for that. But for all those reasons, we've seen a better economic position for the state.
Yeah.
So he's used that to help fully pay for some of the pension deficits that existed before that. He's also made a huge effort to try to fully fund or get closer to fully funding the schools, which was the original purpose of the state income tax
In
to
the
be
first place.
the first place.
Yeah.
So a lot of those things are things that have been major efforts on the part of our government officials, party affiliation unrelated, right? These are Democratic and Republican governors who've all made an effort to try to
Reduce it.
keep some sort of lid on taxes here. And then there's a whole bunch of requirements that we mentioned earlier that the DCA, the Department of Community Affairs, when the township or the schools or the county commissioners send their budgets into the DCA or the Department of Education, they have caps or limits on what you can, and people may have even heard the term caps.
Yeah.
And I think it's sometimes confusing. So should really understand what caps mean. There's two major caps that we are required to comply with when we do budgets.
Okay.
And that applies not only to the township, but it applies to the schools as well. Many people may recall, especially when it comes to schools, that in 2010, when Christie put through the 2% cap, one of the things he required or requested of school boards was that in return for them moving their election, which had always been in April, it was a separate election. Elections are very expensive to run. He wanted them to move elections to November so that everybody was doing elections at the same time. And in return for moving it to a November election, the school boards had to stick to a 2% cap, meaning that they couldn't go out with an increase above 2%. And if they did that, then they would allow school boards to no longer have their budgets approved by a vote of the public.
Wow.
Right? Prior to that, at the April election, you were not only voting for school board members, but you were voting for the school budget. And so schools had to go out and sell their budget to communities and convince people why they should approve a budget. But if they stuck to the 2%, the governor said you didn't need to do that.
Yeah.
So many
That's
school
a major
boards.
incentive.
Yeah.
Yeah.
And they moved it to November. And so board elections are on the same page as council and all the other elections. And they are stuck to a 2% cap. But there are things that are exceptions to the cap because we recognize that there are certain expenses that simply a school board or a township has no ability to control. Healthcare costs are not anything that a board of ed or a township council or a mayor can control. So that's considered outside a cap. If the expenses on your rate has to go up because of that, that's acceptable.
Yeah.
Pension costs, interest rates, these are things, again, that a town or a school
Outside
board
of control.
can't control that.
Yeah.
So if your costs go up because of that, that is a acceptable reason to go above 2%.
Yeah.
So of the two different caps, let's get back to caps for a second. There's a tax levy cap and appropriation cap. So the tax levy is how much you're literally going to go out and raise taxes. Appropriations is more how much you're spending, and there's limits on what you could spend within departments and not only for departments but for the town in general. When we look at the exceptions to the cap, like I mentioned earlier, one of the things we're actually looking at doing in the state legislature is allowing towns to put more things outside of the cap because, again, people living today must recognize that fuel costs have gone up. The mayor and the township have no control over that. There's been increases in garbage and recycling costs that we can't control. There's far fewer companies that are out there competing for that business. So the costs are, in many instances, going up 50 to 100%. The mayor, the council, we can't control that. So there's a bill going through legislature right now to allow those expenses to be outside of the cap because we can't control them. So while we may be able to stick to 2%, we have legitimate reasons that if allowed, we can go above that because those are expenses we really had no control over. And I think that those are the things that people need to look for as ways in which, if we can try to control taxes, we can. But these caps are put in place for a purpose.
Yeah.
There's also a lot of rules and requirements that when it comes to spending or appropriation caps, many people will see that at the beginning of a year for the township in January, we're allowed to actually go above the 2% or the federally determined COLA rate. That's the number that we're allowed to increase in spending every year. But the state allows you at the beginning of the year to go up to 3.5% for that year in case there's emergency need for money that you couldn't have anticipated.
Correct.
And you're allowed for up to 2 years to bank the difference between the 3% and the 2.5% or the COLA rate, whichever is lower.
Yes.
That amount of money, if you didn't have an emergency, you're allowed to bank for a 2-year period of time. So there's a little flexibility that the state allows towns, but it's very, very tightly controlled. Where we spend, how we go out and purchase items, that's all tightly controlled. You can't just go out and give a contract to your best friend.
Yeah.
You have to go out through a formal bidding process. You have to accept the lowest responsible bidder, which is something that you might not necessarily do if you were doing something in your home, right? You might look at a bunch of different bidders and say, oh, that's way too low. That can't possibly.
That can't possibly be a good job when he's done.
Right.
Yes.
But as a town, because
to
we're
take the lowest
so
one.
concerned that we don't want public thinking that we're giving contracts to friends and doing things under the table, we have to do everything up front. And so sometimes it makes us make kind of silly decisions because we don't want to appear to the public that we're favoring any one person. So there's a lot of statutes and rules and caps and things that we need to impose when we do a budget. That's why when we spoke in the first segment about sending our budget to the DCA, those are the things that they're looking at. What's in cap, what's out of cap, why did you put this expense in this area, why did you put that outside of the cap, did you follow the right protocols? There's
a lot involved.
A lot involved in all of that, so that at the end of the day, when they finally strike a tax rate, it's because the DCA, the state essentially, and the taxing body, whether it's the township or the county or the schools, that all of this has been done.
And everybody's on the same page.
Everybody's on this, and it follows all the myriad rules that the state has for how budgets need to be adopted. So I'm hoping that, kind of take you from colonial times to where we are now and all of the intricacies that's involved in a budget, and why it may often seem counterproductive, but there's a reason behind it.
There's a lot involved in making sure that we're accountable to residents.
And a lot of that's going to take us basically into the next segment and final segment, which is talking about why taxes in New Jersey are so expensive because of a lot of these things. And I think that it kind of takes us full circle with understanding from the day you get your tax bill to how we got here, that it is a complicated process and solutions. While there's a lot of people who have put thoughts out there, it's not easy.
Yeah, absolutely.
But we'll get there.
We'll get there.